Hey guys, welcome back to another episode, and I wish I was doing this video in better terms, but today we're seeing a very crazy red day. The Dow right now is down about 1.62%, Nasdaq is down 2.6%, the S&P 500 is down 1.98 as I am recording, and we can take a look by this map. Every single stock, especially in the big tech market, seems to be down big today. We have big companies like Microsoft and Google, Facebook, and Apple down over 2%. Some of these are almost down to 4%. One of my big players, Nvidia, is down 4.1% right now. So this is, for my portfolio, is definitely taking a nice hit today. So in today's episode, I want to take a quick look at what's happening in the overall market, why our stock price is dropping, and I'm also going to share my overall thoughts on the market right now. So let's get started. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment for 10 free stock ideas at the moment. So let's just jump right into it, right? Market is down. My portfolio is taking a beating. I'm pretty sure I posted it somewhere over my head at the intro, just so you guys can see how bad it is right now. But at the same time, right, I do want to say everything should be taken a look at in. I did a stream earlier today where we kind of had a great time, even though it was a red day. Everybody was just sharing ideas of what to do during these red days. And to me, the first thing is, remember, you are a long-term investor, right? So don't look at it in just a daily basis, but take a quick look at how your portfolio has done in the past. For example, right now, my portfolio, even though it's probably seen one of its worst days in the past few months, I'm still higher than where I was in August, right? So it's not, if I put that into perspective, and I know that my positions in my portfolio is something I'm not willing to touch in forms of converting to cash and for the next 5 years or so, then it helps me understand that, hey, volatility might seem scary right now, but I know it's just noise. But I also understand that red days can keep coming. So let's try to take a quick look at what's happening first. And the major thing that's really kind of going all over the news is the yield spike, right? Yield spike is increasing. The 10-year treasury yield continues to a speedy climb on Tuesday. And this is kind of driving more of a tech sell-off. The question is, why is this a tech sell-off? So tech shares fall as rapid rise in rates makes their future cash flow less valuable. And in turn, because their future cash flow is less valuable, they tend to seem more expensive. But at the same time, right, I mean, some of these big players have plenty of cash in their balance sheet. So I don't think it's going to hinder much to some of the big positions. And that's why one of my favorite things to do is invest in companies that have positive cash flow from operations and a very strong balance sheet. If you take a quick look at most of my portfolios, most of them have those two criteria. They have a very low debt, very high cash, and they are positive in cash flow from operations. Obviously, you might find some that don't kind of meet those requirements, but I understand the risk that during times like now, those might take a bigger hit. This is also the main reason why some of the growth stocks or some of the growth stocks that are not profitable yet take even bigger hits because of this. Another sentiment right now that is very important and kind of going in the market, and I feel like this is what happens during red days. There's never one perfect news or one news that really affects the market. It's a little bit of everything. So right now there are budget showdown in Washington right now. The Senate Republic blocked the House passed bill on Monday. We're also seeing the chairman kind of have a few meetings in the past few days, and on Tuesday he kind of commented that the inflation could persist longer than expected due to supply issues and reopening pressure. So the market doesn't like uncertainty, right? So originally they had some form of time frame, then they said, hey, right now inflation is going to last a little bit longer than we thought. The market doesn't like uncertainty. So everything here kind of creates the perfect storm, and this perfect storm kind of creates this red bloodbath that we're seeing right now. So some of the things I'm not doing during the market red sell-off right now. First thing I'm not doing is selling any of my shares. I'm a long-term investor. I focus in companies that I believe will continue to grow. Maybe in the short term of things, and I say in the short term of things, I believe my positions can go a little bit lower than where they're at right now. But in the long term of things, I'm talking about 5 years from now, I believe these positions that I'm in are still very cheap compared to where they're at. So understand volatility can continue. At the same time, I don't have weak hands. These are some strong hands that are going to hold these positions that I'm in. Other things is, if I am trying to buy the dip right now, which I'm not, I usually only purchase on Thursday. That's when I get my weekly paycheck. I am not gonna buy if I, let's say if I was planning on buying the dip, I wouldn't buy all at once, right? The dip can continue to dip. So for me, someone mentioned it pretty well on the stream today. I'm more of a person that buys in trenches. So if I had a nice cash position right now and I really wanted to use it right now, I do have a nice cash position, I'm not using it right now. I don't think this is a dip big enough for me to go into my secret safe and pull out that cash. But if I did, I wouldn't use it all at once. I'm more of a buy over dips and dips and dips, because we have seen dips can keep coming, and I do believe this week is going to be very, very volatile for the market. Again, these are more thoughts for me as a long-term investor. If one is a trader or a short-term investor, I don't understand. I can't kind of comment on that because that's not where my mentality is at. My mentality is, hey, these are positions I'm here for the next 5 years, and I have no intentions of touching them right now unless something seems very, very interesting in forms of position. Maybe one of my tier 1 companies might be looking super attractive. At the moment, no. And I'm actually going to do a quick recap of my tier 1 companies after this. So I hope you guys enjoy. Take care, have a good day, and see you next time.